Hello and welcome to another chart lesson from Oliver Velez, sponsored by iFundTraders.com. Today I am going to talk about CEF, which is starting to become a nice, tasty winner of ours. This gold-oriented stock performed very well for us last week. As you can see, based on the last several months, we've been accumulating CEF with the idea that CEF, along with the gold market, would experience some strength as we moved into the middle part of the year. As many of my traders are taught to do, we buy incrementally using an institutional style of accumulating our plays. We never buy in one single spot. That tends to be an approach practiced more by novices than by pros. For instance, institutions, because of their sheer size, like large multi-billion-dollar mutual funds and large hedge funds, cannot put on their large positions over short periods of time, nor can they put them on in one fell swoop. They must artfully ease into a stock incrementally and quietly without making too much of a ruckus and without attempting to tip their hand. And while our individual activity cannot ripple the waters, so to speak, because we're certainly not as large as the multi-billion-dollar institutions, but we still benefit from the approach of incrementally buying over a period of time, spreading your buys in smaller pieces over a variety of prices to acquire, hopefully, a very nice average price. Now, I began reaccumulating CEF in the latter part of December after gold ran to new highs. We took profits in gold for very nice gains, as those of you who know have been following my work on Facebook. And CEF was once again starting to look a little tasty in the latter part of last year. And the first buy occurred in the mid $13 area. The second buyback in occurred in the very, very beginning of February, down in the low $13 area. In the mid $12 area in February came another buy on a bottoming tail, bull elephant type bar. I like the way CEF came from below the 20-period moving average to break through the 20-period moving average. Now, a move from below to above is a noteworthy event. However, the most important thing to consider once this event occurs is how the stock handles the pull back toward the 20. If the 20 captures or halts the pullback after having broken from below to above, if the pullback is halted, that is a very key sign that the bulls are totally in control, and the move from below to above the 20 was not a fluke and not something temporary. It actually was a pure, unadulterated sign that the bulls have regained control. But unless the pullback is held by the 20, that is not the case. Had CEF, after coming from below to above, had CEF cracked through the 20 to fall all the way back, that move in retrospect would be looked at as just a primary temporary phenomena. Well, because CEF held at or near the 20-period moving average after breaking through, we now are absolutely sure that higher highs and higher lows will continue to be the trend in CEF. And certainly that has proven to be the case. After the capture and hold at the 20, we move to a new high, all right, from the previous high. We pull back, we break through a little bit. That's perfectly okay, but this low manages to form higher than the previous low, producing yet another bull elephant bar, in which case we buy into bull elephant bars, and here's another move to a new high. Now, if you look very closely, we are retesting now an area of former trouble. And what do I mean by an area of former trouble? I'm always cognizant of points at which a stock has fallen very steeply from. Okay? That's very important to understand. These points that have caused trouble often serve as areas of resistance, meaning they're not that easy for the stock to penetrate on the first attempt. Why? Because simply there are people who have bought in this $15 area, high 14 to $15 area. And those who bought and experienced this pain, if they held on, what do you think they're anxious to do after holding on? And the stock eventually comes right back up to the area that gives them all of their money back or close to it. Their attitude likely will be, whew, I got my money back. Let me get rid of this thing. And so these points at which traders experience pain bring in an extra degree of selling, because those who bought in that area and held through the pain are anxious to sell at those same areas to get even, to get their money back. So it's going to be interesting to see how CEF does in fact handle this prior area of pain, this prior area of resistance. I'm actually hoping that this area of resistance causes CEF to pull back. I'd like to see that pullback halt in the $14 area to low $13 area. If a higher low forms and CEF gives us another indication that it's ready to move to a new high, that would present yet another accumulative buy opportunity. So CEF continues to reward, but there's more to come. Stay tuned.